4, 3, 2. Hey everybody, Josh Sigurdson of World Alternative Media here, and we are joined by Tim Picciott of the Liberty Advisor, John Sneisen of the Economic Truth, and Chris Karabatz, of course, who we're happy to have back on the show. We are going to talk about our favorite financial institution to call out, and that would be good old Deutsche Bank today. And make sure, before we get into the articles, make sure to hit the like button, check the links below, and send in your super chats and questions on the live stream today. Let's go into Deutsche Bank, guys. One of the once one of the largest banks in the world. They are not doing well right now. If you look at that share price there, you have $5.90 down 1.99% from the last close. But what's interesting about it is in February, we saw a major pump of the share price after years and years of just a just unbelievable collapse that is just of epic proportions, which for John and I, who we have been talking about Deutsche Bank now for at least 6 years on WHAM, we've been calling out this insanity for years and how they were eventually just going to collapse completely and cause possibly a massive domino effect that might carry over to multiple other financial institutions worldwide. The scale of the Deutsche Bank collapse, we will go into further in a bit, as well as other banks. And we're going to go into bank runs, bail-ins, cashless, and the latest news on coronavirus later in this video. But for now, let's get into the first article here out of seekingalpha.com. As it says, Deutsche Bank has too many risks, you think? Summary says, Deutsche Bank's recklessness has entailed much legal woe, but the rot is far from removed. The lack of profitability is going to affect in the current economic climate. This is a value trap, not a value opportunity. And obviously, they've been pushing this overhaul for the last couple of years, switching their CEOs around, turning tables. It's a trap. Well, and of course, I trolled the Deutsche Bank headquarters in Frankfurt, Germany last year and tried to get into the building and ask them about, possible bail-ins and the collapse of their banks. And they didn't like that and they didn't let me in. But nonetheless, I dodged some falling bankers and did a breakdown that I think everyone should check out on our channel. But Deutsche Bank has been trying to overhaul everything for years. They've been through multiple scandals, from rigging silver and gold markets. They've had to redo their living will test. They've had to essentially, there's one of our many videos.
Oh, that was a different one.
Yeah, but they've had to redo their living will test. They were downgraded by the S&P about a year and a half ago. And obviously there was a Danske Bank scandal, which showed that they were money laundering, which is what banks do best, while, ratting everyone else who might try to save money from the government out to the government. But anyway, we're going to go into that further in a moment. But let's go into this next article out of Bloomberg.com, which is Deutsche Bank mulls scrapping management bonuses this year. They're scraping the bottom of the barrel. When they get to the point where even the management positions are like, yeah, sorry, you guys don't get bonuses anymore. You guys are screwed. As it basically says here, other measures are also being discussed in response to the crisis. Debate comes as regulators pressure banks to be prudent. And as the article goes into, Deutsche Bank AG is considering scrapping bonuses for top management this year as regulators urge banks to preserve capital and keep lending through the coronavirus pandemic. Cutting bonuses is just one possibility, and the company is also looking at alternative measures that wouldn't involve variable compensation, according to a person familiar with the matter. A decision could be announced as early as this week, the person said, asking not to be identified because the discussion is private. Deutsche Bank declined to comment. A growing number of European banks are waiving bonuses for top management as regulators urge them to exercise constraint and retain funds for lending after being granted large-scale relief on capital requirements. Spanish lenders were among the first to move, with Banco Bilbao Vizcaya Argentina. I'm in Mexico right now.
Basically, there's no way to cut yourself to prosperity, and they think,
right,
we just cut, these 15,000 jobs over here, get some little bonus cut over there. But if you're losing money on everything that you do, there's no amount of cutting that's going to get yourself back to.
Well, and absolutely. And you see this Banco Bilbao Vizcaya Argentaria SA on Monday cutting, 300 of its executives waived their 2020 bonuses. Italy's Unicredit, another good old friend of ours, followed suit late Tuesday. And as it says, a bank shareholder bank shareholders, managers, and key risk takers should also take part in the rethink of where we are right now and try to preserve as much capital as possible. I think they're up against a brick wall. Jumping to the Financial Times article, which comes next, says Deutsche Bank's overhaul derailed by coronavirus fallout. Now, as I've mentioned before, coronavirus was a catalyst that would knock a bunch of dominoes over. But once we start seeing all the major banks start just toppling over, which they should have a long time ago, their cash to deposit ratio is terrible. They are essentially bankrupt, and they have been for a long time. Once we see all that start knocking over, we're going to see one of the craziest domino effects worldwide of the banking system we've ever seen. And I think it's unfair to just call it Lehman 2.0. People will be calling Lehman Brothers Deutsche Bank, pre-Deutsche Bank collapse or something like that. I think we are entering
Star
into
Wars, like a Star Wars prequel or something. Like going back.
Absolutely, this is historic. This is the biggest banking collapse in the history of the world on our doorstep here. John, we've been talking about Deutsche Bank together for many years here at WHAM. What's your initial reaction to what's currently happening at Deutsche Bank?
There's like zero reactions. We all know it was coming, and there's no way out of getting out of this kerfuffle for Deutsche Bank. Now, actually, while I'm on here, I wanted to share something with everybody here, and I'm going to share my screen. Just give me 1 second here, because I want to show you the Deutsche Bank's balance sheet here. Just 1 second here. So here you can see actually the balance sheet. And pay attention to this number here. So they haven't done anything to sell off their derivatives. Here they are laying around 43.457 billion in derivatives. No, sorry, trillion in derivatives, not billion.
Of course.
So as you can see, and also take a look at this. This is Deutsche Bank, the actual default risk of Deutsche Bank, and this is from Börse.com. And here is a 5-year credit default swap, which is a insurance instrument on it. And as you can see, they're getting back up again to where we were when we were talking about it a couple of years ago, when they were really close to when the cocoa bonds and everything started to fall apart. So as you can see here, we're starting to reach new highs again. We're very close as, the last week or so. Deutsche Bank has really, as you can see, it's really peaked here. Let's see. Yeah, so this was back in February. And as you can see, it's just starting to go up quite drastically. And currently it's sitting at 170 in cost for, the default insurance on Deutsche Bank. Deutsche Bank is has always been in trouble, and the funniest thing is that Deutsche Bank actually is the major commercial bank in Germany, and that is what should really scare people, is that the biggest bank in Germany, one of the powerhouses of the world economy, is actually completely in trouble. And of course, they tried to merge with Commerzbank back in the day.
That's the thing, John. You see that failed merger happen last year. And by the way, Commerzbank, if you've been to Frankfurt, Germany, is literally across the street from Deutsche Bank in the financial sector. And anyone that looks out a window at Deutsche Bank will just see a Commerzbank building. What's crazy about that to me is that it seemed like they almost knew something big was coming. Of course they did. They saw their bank crumbling for years, going back to 2001. But they see this coming, and they were clearly scrambling to try and preserve whatever was left of their bank.
Well, Deutsche Bank has been around for so long. We got to remember, like, Deutsche Bank was around, funding, it was used to fund the Nazi empire at one point. Then they got broken up into massive amounts of
banks were funding the Nazi empire? No way.
And then of course Deutsche Bank got, after that they got put into 12, I think it was 11 or 12 different banks, but then magically just 10-15 years after, they merged back again to Deutsche Bank, and then we got what we have today with Deutsche Bank. And of course there's so much corruption. Actually, there's a video out there that was done on Deutsche Bank specifically. There's an author that just came out with a book called Dark Towers. And it's if you go and look up Real Vision and Dark Towers Deutsche Bank, it's actually really, really good breakdown of the whole history of Deutsche Bank by a journalist. So it's very interesting, what he's covering about all the crazy amount of corruption over there. But it's not just Deutsche Bank. It's banks everywhere that are
and that's what we're going to get into pretty deep here today, because we've got a lot more stories coming up. I want to go to Chris at Carabats to ask, we're looking at default at Deutsche Bank basically right now, and a lot of people call Deutsche Bank possibly the number one domino on the global banking stage, to knock over the rest of the dominoes worldwide. What do you think of the colossal collapse of Deutsche Bank since 2001?
It's frankly astonishing. I mean, back in 2001, their stock was at $40 here, and it reached a high of like 120 before, of course, the 2008 collapse. But the 2008 collapse only got it down to like 20, and now we're at $5.88 of after-hour trading, and that's an amazing fall from grace. I mean, that's huge. That's Bitcoin hasn't fallen that much. I mean, that's a solid altcoin territory there. It's really amazing the storied history of Deutsche Bank. I mean, it is a hugely aged institution that's been around, as we said, forever. And it's been in the news quite a bit lately. Like, a couple of years ago, they were fined a few $100 million for laundering some Russian money, whatever that's worth. And they're actually somewhat related to Trump. I mean, just a couple of days ago, the Trump organization asked Deutsche Bank for a loan payment delay. I mean, it's this whole thing. And with
they're also related to 9/11 as well. I mean, they were the ones too. They were the ones who, their subsidiary Alex Brown was the one that placed the put option orders on American Airlines, which their former CEO was Bunny Z. Kronegard, who 6 months prior to him leaving was the acting director of the Central Intelligence Agency. So, I mean, it couldn't happen to a nicer bunch of people over here at Deutsche Bank to eventually have this, absolutely implode. John was bringing up Nazis and how they were funded. Now, I got halfway.
What is it about Germany, by the way, man?
I got halfway through the Tower of Basel, and then all this financial stuff started kicking off, and then I got too busy to read the rest of it. But anyways, the Bank of International Settlements, they were run by an American named Thomas McKittrick, who then went on to go work for J.P. Morgan Chase. Even the CIA was involved in that as well. So you had Alan Dulles was like a chief instrument in helping get that set up. They had over 80% of their profits were derived from the what's it called? I forgot the name. I'm almost thinking Deutsche Bank, but whatever German's central bank at the time, the Reichsbank. That's what I.
Yeah, Reichsbank.
So the Reichsbank. Yeah, so the Reichsbank had over 80% of the Bank of International Settlements income came from the Reichsbank, and then the Reichsbank. Where did they get their money from? It was from looted Nazi. It was a Nazi gold that they took from fillings of Jews' mouths and all this other stuff. And then but then meanwhile, an American was running it, and his either second or third in command would actually during World War II would sign all of his correspondence, even to other countries, even to allies, saying Hail Hitler. And so the U.S. was funding an institution that then had its number 3 person who was signing all the correspondence, Hail Hitler. So yeah,
I can't wait for someone to clip that little bit out of Tim saying that and use it in a mashup video.
Yeah, go for it.
But I mean, this is
I do have some people that are trolling me on every video I do across platforms. So I'm sure that guy.
that's a badge of honor, man. But with what we are witnessing here is absolutely historic, and honestly, it was obvious that this was eventually going to happen to Deutsche Bank. I mean, it's literally, you can't find a worse situation. I mean, they were trying to tell people to buy up stocks, shares. I think it was like 5 months ago or 6 months ago. And yeah, then the share price pumped in February. But if you actually look at, an all-time chart for the share price of Deutsche Bank, it's pathetic. It's horrible. It's just like, how does anyone, most of the major shareholders have left. And there was an article that came out last year, which talked about how all these major whale investors in Deutsche Bank had just took off because they couldn't. Why would they stick around for this? Why would they stick? Yeah, if you play it right with insane amounts of risk, you can make money. But why would you do that? Well, there's so many better things to invest in than Deutsche Bank, obviously. We are going to get into more banks right away. But John, how long do you see Deutsche Bank hanging on there?
I don't know how long it'll hang on for, to be honest with you, because right now there's tremendous strain on the credit markets because the coronavirus is shutting down. There's no economic activity, no money to be made to pay off debt. So there's massive strain left, right, and center, especially for the big organizations out there, and that's what you just saw with the oil price being low, you saw one of the biggest frackers go bankrupt just recently in the United States. So you're seeing that strain is just going to get worse and worse and worse. And then, of course, the underlying derivative structure of it, or the overlying, is the right word for it, is going to start to really struggle because, got about 6 times almost more collateralized loan obligations than there was collateralized debt obligations back in the day when that blew up. So yeah, no, it's and Deutsche Bank has, is JP Morgan's arm into Europe to, do the derivatives trading.
Right. And we could get deep into the issues of the housing market and the relations there as well. But I mean, for now, we'll update all of you much further on what's happening at Deutsche Bank soon. But for now, let's jump into Wells Fargo, another one of our favorite banks. Isn't that right, John? We've been talking about Wells Fargo for years and all their crazy scandals and all the things that they've been up to. And as this Yahoo Finance article says, what is Wells Fargo's PE ratio after its share price tanked? Of course, that's price earnings ratio. But what should be the title of this article right here is what it says in the article itself. It says, unfortunately for some shareholders, the Wells Fargo share price has dived 34% in the last 30 days. 34% in the last 30 days. The drop has capped off a tough year for shareholders, with the share price down 46% in that time. I mean, like on a regular day, obviously this is like the apocalypse right now, coronavirus, global economic crash, global depression. But I mean, it's crazy to see, it's significant to say the least, to see Wells Fargo's share price drop that much in 30 days. And as the article goes into here, it says, all else being equal, a share price drop should make a stock more attractive to potential investors. They're like, these guys are so desperate. This is ridiculous. Yeah, go invest in Wells Fargo after they drop 34%. It's low. You'll make a lot of money, and that might be true if it isn't for the fact that it's very likely that this bank is going to fold at some point during this global depression. I mean, along with many of the big banks. It goes into the price earnings ratio. It says we can tell from its price earnings ratio of 6.51 that sentiment around Wells Fargo isn't particularly high. The image below shows that Wells Fargo has a lower PE than average, 8.8 PE for companies in the bank's industry. And you can see that image there. Chris, what do you think about this massive drop in the Wells Fargo share price and the price earnings? This is just, I don't even know what to add to this. What do you think?
I mean, this is an amazing American institution that's, that really is failing. I mean, everybody knows Wells Fargo. They've been in the news. Everybody hates them thanks to a lot of their activity over the last couple decades. And, we're really just waiting for the first big bank to seriously fail at this point. Our economy is so intertwined that if one of them fails, it's going to pull down a bunch of others, just like we saw in 2008. And other things, we talked about the mortgage market a second ago. I mean, Wells Fargo, they're now scaling back on jumbo loans. They won't give any jumbo loans out unless you have $250,000 in liquid assets on hand with Wells Fargo. So they were the biggest lender of jumbo loans last year. Over 70 billion of them is given out. And now they're not going to do any unless you have $250,000 sitting at Wells Fargo.
So they won't let you get like a jumbo mortgage, or just like
a jumbo mortgage. So basically, a jumbo mortgage is when Freddie or Fannie Mac won't back the loan because it's too big. So over somewhere between $500,000 to $750,000 is the limit.
I think it's like 565 or something. But that's crazy. So you've got to have basically 50% collateral.
Yeah.
If you want to underwrite that.
Yeah, which is.
But meanwhile, they hold on to none of our money.
Exactly. Yeah. Exactly what you just said there. The $250,000 that you're required to have on hand with Wells Fargo, they probably don't have. They probably have already given it out. So you're required to have this collateral on hand with them. So they have your money on the books, but they're not required to hold that 10%, or that they used to be able to hold, or I don't know what their requirements are at this point. Are they among those that were lowered to 0%?
I mean, what's his name? Jerome Powell. We have the clip where he actually says, I don't know if Josh wants us to play it or not. I could pull it up, but there's a.
We can't play the clip, copyright crap. But...
Yeah, there's a clip on him, CNBC. I think I may have saved that clip somewhere else just as the audio. But yeah, he's on. There's a clip from his press conference where he actually says that part of the new deal is required banks not to hold any of your money. And we do some of the comments over here saying that, hey, they're not, maybe it's because they're not opening up enough fake accounts anymore.
Yeah, well, that's the thing. Let's remember, this is a bank that was giving people, mortgages that they never asked for, the insurance that they've never asked for, car loans that they never asked for.
Credit cards,
people that had insurance on their cars, they were getting them repossessed because apparently Wells Fargo was creating fake insurance on their cars that they never ordered. They were creating fake bank accounts. In people's names. They're one of the biggest, most criminal banks out there. Warren Buffett's favorite bank. John, what do you think of all this insanity as we see one of the most scandalous banks in American history, which is saying a lot, go downhill so hard?
No, I think it's funny to see actually how Warren Buffett is involved in this bank, of course, and then trying to he actually tried to go over there and say naughty boys, and then tried to tell them that they were bad over there, and it was funny, so much fraud that it was ridiculous. It was auto insurance. There was there's I think 5 or 6 scandals that me and Josh have covered over time.
5 or 6. We actually did a video once. I think that was the top 20 Wells Fargo scandals this year. It was in 2017. It was just 20 scandals in one single year.
But here, I wanted to show you what's actually happening in the United States. This was back in this was released in 1997 by Bank of Canada. And this is the implementation of monetary policy in a regime without a zero reserve requirement. So actually, Canada has had the zero reserve requirement for a very long time. And so that is exactly what we're having right now. There's, trusting the banks to keep their own reserves is trusting, your burglar. You're going to give him your gun when he comes into your house and trust him that he'll leave. That's exactly what that is like. So
sounds like trusting the government, honestly. And that's one of the biggest issues that we've tried to get across for so long here at WHAM, is that if your money's in the bank, it's not yours, it's the bank's. And you have to realize that these institutions may protect you for a short period of time and protect your money, keep it safe for a short period of time. But eventually, push comes to shove, and these institutions financialize the F out of themselves. They aren't the old school savings and loans banks that, you see in, all these old movies, Jimmy Stewart movies. This is a much different situation that we're dealing with right now.
Yeah, they're merged together. It used to be investment banks and savings and loan banks, right? So you went to an investment bank to have you knew that they were involved in risk and investing your money for you, but then you had the savings and loan banks where you deposited money and then they borrowed part of that out through fractional reserve lending, which was still a very corrupt activity. But at least, they were involved in some kind of servicing activity, the savings and loan banks. But, that failed too. Remember the savings and loan crisis back in the 80s, right? So
of course, well, it always ends up failing. And obviously we don't have as much time to do our video today as we did yesterday, but I do want to go to Tim right away. I want to let everyone know to hit that like button and check the links below and join our new newsletter at www.iamband.com. www.iamband.com, and you can send in super chats. Chester Wolf, the Griffin, sent $5 in the super chat and says the U.S. government has given banks billions of dollars to loan out to small businesses. All the banks have refused to give any loans or anyone loans. Hashtag corrupt. Well, if we're going to think of one thing there's two major corrupt institutions that human beings have put up with for far too long: banks and governments. And we're seeing the collapse of both right now. Unfortunately, one is growing before they pop. We're waiting for the government bubble right now because they're getting so big. Eventually, they're going to pop themselves. But before we go to Tim, I want to bring up this next article here that says Wells Fargo has $384 billion of lending power stymied by Fed cap. And as it says, bank has suggested easing asset cap to boost lending in crisis. Fed is reluctant as a bank keeps working to address scandals. So among all these insane things that are happening right now at Wells Fargo, they are also still dealing with countless scandals. Remember, the major banks were giving people, were paying people off for lawsuits going even last year for 2008. And while continuing to do the same things they did in 2007, 2008, but maybe repackaging or renaming whatever it was that they were doing. Tim, Is it a good idea to be keeping all your money in Wells Fargo Bank?
Well, I mean, if you keep all of your money in the bank and keep all of your assets in cash, I mean, since 2008, I've been calling that you're going safely. Hey, get those dogs under control, Snyson. Okay, I got you muted. Hey, don't unmute yourself. That's that. Okay, we were both muting and unmuting at the same time. Okay. Anyway, that's what happens when you're live over here. But John was bringing up, what was he bringing up? The separation of the investment banks and the retail banks. Actually, not the separation, about how they now basically have merged. That was Glass-Steagall. That was done in 1999. I did an entire video like back when I first started pumping out videos on this, because a lot of at the time people were saying, oh, well, you know, it's all Republicans that are blamed. Now, again, I hate both the parties, but people are like, oh, it's just Republicans who helped, you know, deregulate Wall Street. Well, it was actually Bill Clinton, Robert Rubin, and Larry Summers were the three main people. Also, Barack Obama had his hand in there as a community activist, where back in the day, he actually sued, I believe it was Citigroup, forcing them to lend money into more undesirable areas, which at the time, I think all the areas in Obama's area in Chicago, was like 99% of them ended up going belly up. So, you know, he was there. And he also, I think, like his third biggest contributor, he was the third largest recipient of funds for the mortgage industry, even though he was just a freshman senator. And, you know, and Chris Dodd and Barney Frank were number 1 and 2. And then those were the guys who got to write the bill on how to quote unquote fix everything. And then meanwhile, you know, and this also goes along with an article that I saw the other day called "Is the Fed is the arsonist and the firefighter?" And so just like this, you know, Chris Dodd and Barney Frank were the arsonist and the firefighter. And so you had, you know, then Larry, what's his name? Robert Rubin, who was the Treasury Secretary for Clinton. He's the one that helped separate both of these. Then as soon as he left, he then skipped town, went to Citigroup, which was the main beneficiary of this back around 1999, 2000, and then got a gigantic payoff. And then I think then he left right after everything blew up in 2009. So yeah, all this insidious relationship between the banks, and I don't have all this memorized. So I mean, I have an entire video on my podcast about this, called something along the lines of, you know, is Bill Clinton really a great economic success? But I'm an equal opportunity hater, so I've got one on. You know, I've been hating on Trump and all his BS that he's been doing. And obviously George W. Bush, I mean, I don't think anybody's defending him. So I really haven't spent a lot of time going after him, because, you know, no one really there is defending him. But yeah, this is all, you know, the big banks are, you know, they are the arsonist and the firefighter. They're the ones. Well,
we are witnessing something very different right now than we've ever seen in history. I mean, it goes along the same lines of what we've seen in past collapses, but this is on a far bigger scale. And I wanted to ask, as the title of the video also suggests, how long until the big banks crash? Like, generally speaking, when do the dominoes fall? Because I am seeing some bank runs. I am seeing some, you know, reaction to this from the average person, like the regular average person on their street, taking money out of their bank account because they're concerned that they're going to lose it, which is something I haven't seen since 2008. So I wanted to ask, I mean, what do you guys think as far as how long do we really have when we have a global depression on our doorsteps, not on our doorsteps, in our house at this point?
About 0:30. No, we've got it on the doorstep right now. But the question, I mean, I'll let the other two guys answer, but I think the bigger question is, when do the banks crash, or when do the banks crash us? So, I mean, the banks can keep getting propped up, and then the rest of the economy just goes to crap. But it's a good thing we got lots of toilet paper. But I'll let either.
Well, I know we keep hearing this term, they're too big to fail. Well, nothing is too big to fail. Sometimes they're too big to not fail.
And too big to jail in the case of HSBC with Obama and Fast and Furious and all that stuff going on. So.
Yeah, well, I mean, so let's go to Chris. What do you think? I mean, we seem to be far past the eye of the storm at this point.
Well, I don't know how long they can keep the music going. Like, this is one of those things where they are desperate. Even Deutsche Bank and Wells Fargo, these giant, horrible institutions that we all know are corrupt to no end, that are screwing things constantly. You know, they don't want to let any of them fail, because as soon as one does, a lot will. And they're going to do their best to keep that music playing as long as they possibly can, because on the other side of that is real bad times. And if you think about it, you asked earlier, would you keep all your money with Wells Fargo? I mean, I hope not. You have to be aware that when banks go under, you as depositors are essentially issuing the banks an unsecured loan, and you are last on the list of people to get repaid if the bank goes bankrupt. Everybody else they owe money to comes before the people who actually gave them money. And sure, you might have FDIC insurance for up to, you know, $250,000, but, you know, the FDIC has about $25 billion on hand, and there are about $9 trillion of assets that they insure. So that's not a great ratio if things actually
It's like
start
us
turning
like
south.
backstopping Bill Gates or something. I mean, it's
Yeah.
just picking us collectively. Good job, guys.
And
Yeah,
it's
don't worry,
crazy.
I got Bill
wanted to
Gates'
mention-
check.
I wanted to mention something that I don't think I've mentioned yet in this video, is that when I first started reporting on Deutsche Bank with John Sneisen years ago, at February 2016, the derivative exposure was at $75 trillion. Now, $75 trillion is the GDP of the world. And Germany's GDP is $3.5 trillion. And they've fallen, and they're somewhere around the $40 to $50 trillion mark right now. It's a much different situation than it was back then, but it's like at that point it's almost irrelevant. When you're at that height at $45 trillion, how do you think that the derivatives will come to roost after all this is said and done?
I don't know where their derivatives actually sit at this point, like what they're derivatives of. But as we all know from the 2008 crisis, when a little bit of the derivatives go under, that has huge ripple effects. And from what we saw earlier, they were at $43 trillion as the end of 2019.
Yeah.
And that's more than a little bit of money. I mean, that is that is something that we will feel when that goes under. And I don't know. I mean, I'm sure we've all seen some of those old shows talking about derivatives and what they are and how big they are, but the amount of derivatives, which is essentially people betting on people, whether or not other people will pay back their loans. It's not the actual loans themselves. It's not those actual securitizations. It's a derivative of that. It's kind of a calculus term where you go one step away from the thing itself. So it's all made up money. None of it really matters except for the fact that our entire freaking economy is built on this nonsense for some reason, because it's easier to make up money and bet on that than it is to actually make real things.
Right. And sorry, go ahead.
No, when a little bit of that fails,
the money gun being pointed at him, and had to think carefully what he's going to say. I know John got his money gun ready.
Everybody needs a money gun.
I did want to say we are over 400 people watching. We are over 400 people watching right now on YouTube. So thanks for tuning in, everyone. Make sure to hit that like button. We're getting further into this right away. I appreciate everyone joining us, and we'll get to questions soon. But John and Tim have money guns there. Want to shoot your load, guys?
Oh yeah!
Oh god!
Oh, it's so good.
It's raining.
I've got Trump down on the
cash.
phone, so that's it's not any money. It's to keep America great again by printing our way to prosperity. Republican fascism 2020. We're all for it.
Yeah, actually, guys, to go back to derivatives here for a second. So this is some of my research that I've done, and as you can see down here. This is different types of asset backs. So there's a whole wide array of different derivatives out there. As you can see, there's derivatives on automobile loans, on credit cards, on different equipment. There's a whole bunch of other ones. There's student loan derivatives, and there's derivatives like the CDOs that have mortgage-backed securities in them and the collateralized loan obligations. But asset-backed securities are the ones that are, what they're called. And as you can see here, this is two charts that shows 1995. It's very little, but then suddenly there's $776 billion worth of derivatives in the automobile sector in 2019. And as to look a little bit further on that, and as you can see here, you got prime, but then look at almost the prime and subprime in auto loans itself is very similar. So there's $52.3 trillion, billion dollars in underlying assets on subprime auto loans. And so like how many subprime, mortgages were bad, right? It was 13 point something billion that blew up, that caused the crisis. Here we have $52.3 billion in subprime auto loans that is ready to blow. That's on top of the collateralized loan obligations that, of course, is way worse right now. With the corporate debt being just derivatized. It's interesting. We were talking about the bets on these derivatives. So there's those derivatives that have all that collateral, like they put all these debt into it. But then on top of that, they're betting against it using what I showed earlier on Deutsche Bank, which is credit default swap. You know who actually invented the credit default swap and why? It was Blythe Masters. That invented the credit default swap. And the reason they called it a credit default swap and not credit default insurance was to, get around the legislation of the regulation of it being an insurance product. So
then she went over to work on some different crypto projects, and then I think left the crypto space to do something else. So she's just
and she also cornered the commodity markets. How many commodity markets did Blake Masters corner when she was at JP Morgan? So these banksters are
just
so
like
horrible.
government banks attract the most criminal people in society, the most psychopathic people. But by the way, if you haven't already, hit that like button. Super chats help a lot. We're going to go into some more news, and I really appreciate everyone tuning in here. Let's go into this next headline out of, I believe, CCN, not CNN, CCN, which says FDIC's ridiculous ad to stop bank runs is sending the opposite signal. The Federal Deposit Insurance Corporation is discouraging people from withdrawing money from their banks. What are they trying to hide? I don't know. What are they trying to hide? I find it hilarious that they
Can we play the video? Can we play the video? I mean, it's from
no, we can't. It's I know it's fair use, but YouTube's ridiculous these days and will literally take your channel down on fair use. So, but anyway, as it says, the FDIC released a video discouraging people from withdrawing their money from banks. The ad comes at a time when the reserve requirements of the Federal Reserve drops to zero. Virtually no one is buying FDIC's latest antics. Well, why would they? Keep your money in the bank. Keep your money in the bank. Don't take it out. And it's similar to what we've heard from many news organizations lately, which we'll go into shortly. And I think there's a reason behind that.
How fitting is it that it's like a woman that can like barely speak English, or like English is their second language, trying to reassure a bunch of Americans that their money's safe in the banks? I mean, it's almost like you can't even. It's like when you go to a inland border checkpoint, and it's the guy that can barely speak English, Mexican guy that's like asking me if I'm a citizen or something, just traveling to San Diego.
I know. It's ridiculous.
Tone-deaf commercial you ever saw. I mean, my comment on it is nothing's official until it's been officially denied, and this was the official denial. So make sure you have a little cash on hand.
Yeah, well, and this is something that we're seeing all over the world right now, as we see in this next article. Egypt's Egypt's central bank caps daily withdrawals to just $635, fearing bank runs, and they're also capping deposits, which makes 0 sense at all, which Chris was telling me before we went live here. But there's obviously a clear sign of banks getting concerned about people running on the banks, which is exactly why they are pushing cashless.
I was actually thinking about that since I talked about it, and I said that didn't make any sense. I think it's just them trying to make it harder for everybody to use cash. If you can only deposit a little bit at a time, it's much harder to actually.
And you might have coronavirus on your cash too, so you don't have to take it out.
Yeah, hey guys, what's interesting is this whole deposit insurance scam that's out there. Is really funny, and of course I talked about this in my book Canada the Greatest Economy in the World ? Back in 2015, where I actually went into the CDIC.
Find it on Amazon.
The Canada Deposit Insurance Corporation, and I ran their numbers. What they had in the insurance portfolio, all this stuff, and as you could see, they actually held 0.39% of all the deposits under 100,000 at the time. So they're going out. Of course, the government claimed that they would, put in another amount of money. It was so that would have the coverage up to 3.37%. But what if you have one or even two banks fail? Nobody's going to get their money back, right? So, and also you got the financial claim scheme in Australia. I went into great detail on that. The government will actually come in and give $20 billion to any bank over in Australia if there is a failure. To cover deposits, but the problem is the deposits in the banks are usually anywhere from $600 to $900 billion, right? So the actual scheme, and it's funny how it's coming out. I received an email for not too long ago from my credit union saying that there's no worries, like all your money in your bank account is insured, so don't worry and don't take out any money. Everybody's coming out there because all these banks and credit unions, they know exactly very well the dangers of people wanting to have cash, because that's their Achilles heel.
How much is the depositor insurance anyway? I mean, the depositor insurance isn't a very large guarantee.
Well, it creates moral hazards, because then nobody cares what their bank balance sheet actually looks like. Because if they know that, hey, I've got 50 grand or I've got 10 grand, or for the average American that has $600, then okay, well I don't care, because FDIC is going to back it up. which then allows banks to get even more reckless. And the banks know that if they get more reckless, then that they're, that they're puppet masters, or they are the puppet masters, that they're going to get bailout money, and then get bailout money from who? The Federal Reserve. Who owns the Federal Reserve? The banks. And so it's a chicken guarding, it's not the chicken, it's the fox guarding the hen house. Like,
and then there's BlackRock.
Yeah, and BlackRock. I mean, that couldn't have be more like an Illuminati-type company if you look at it. I mean, just look at like all the, BlackRock, the naming of it. I mean, I think the guy who's in charge of that, Larry Fink, the founder of it, he was basically involved in the creation of mortgage-backed.
And by the way, if you study ancient civilizations, BlackRock is very significant to most ancient civilizations, and is a very religious thing for many ancient religions. But we'll get further into this in a moment. I do want to bring up the next article for context here, as it says.
We got 450 people watching too, and it got some good super chats going too. So
yeah, make sure to hit that like button. I'll get to those super chats right away. I really appreciate it, guys. As this article out of Euro Money says, Lebanon depositor bail-in may be the only way to save the banking sector. It's out of Euro Money here. And this is the Lebanon, who's been in a crisis for a while, to say the least, is literally saying depositor bail-in may be the only way to save the banking sector. It'll save the banks temporarily, but you're going to have people burning down your bank because you're going to be stealing everyone's money. And again, it's not your money, it's a bank's if you put it in the banks. And we saw in Canada, we warned years ago, John and I, about how they were writing right into the budget bail-in regimes. They've done it in Cyprus. They're going to continue to push this agenda, especially when they are going fully cashless, which I think is one of the major bottom lines that they're trying to get to here, as far as stopping people from being able to flee the old guard system. And that's why we've been trying to warn about it for so long. John, you look like you're chomping at the bit. What do you think?
Well, bail-ins came out of the G20 and the Financial Stability Board. They were the one that actually put out the legislation that got implemented by nations, by the G20 nations. And here's, of course, the principles of on bail-in executions by the Financial Stability Board. So it's Financial Stability Board is a group of guys that sit there, the top central bankers in the world, and they put together schemes and laws to be implemented in banks around the world. So it's like a centralized little group of, about 5 to 20, high up central bankers that sits there and create all the, all the rules for the whole world. So basically it was way better than the IMF. And the guy that actually wrote about this has said that, it's so much better because it has such a better dictatorial power that, there's less people to make decisions over the whole world. And with the bail-in, I don't know why we call it bail-in. You got to call it by the name that the banks and everybody has written about it. They don't really like it to be called bail-in. It's a bank recapitalization, Josh. That's the right term.
It's a holiday.
So.
It's a holiday. It's a bank holiday. Everyone gets that.
Yeah. It's a holiday, and then they recapitalize the bank, and everything is fine except you lost most of your deposits. It's the it's such a. Go ahead, Tim.
In 2014, Stanley Fischer gave a speech in Stockholm, Sweden, which now it's actually impossible to find on the Federal Reserve website. But I was just able to real quickly pull this up. And Stanley Fischer, vice chairman of the Federal Reserve, former chairman of the Bank of Israel. So, I mean, why you even have an Israeli citizen who's, running the central bank to begin with is another question. But as this is part of a speech, as part of this approach, the United States is preparing a proposal to require systemically important banks to issue bail-inable long-term debt, aka steal your money. That will enable insolvent banks to recapitalize, themselves in a resolution without calling on government funding. This cushion is known as a gone concern buffer. That was 2014. I just happened to be on the Federal Reserve's website, and I was reading the transcript of the speech because I'm a nerd like that. But now it's funny. I used to type that into, now I use DuckDuckGo or Presearch or Brave. But you try typing that into Google, and you can't even find it if you type in the exact thing. But I found another one of somebody saying that. So, yeah.
Oh, man. It's absolutely insane.
Plan. We're not being conspiracy theorists. These are the central bank. This is their own words and their own plan.
Yeah, and they've been saying this for years. And I can't forget, Mario Draghi just a year and a half ago when he was still with the ECB saying that he wanted to get rid of depositor insurance. He alluded to it in one of his speeches. and then never heard about it again. Obviously, Christine Lagarde, the criminal, is there now. But it amazes me that people still say it's Chicken Little. This is like on our doorstep in our house.
There shouldn't be any federal deposit insurance. It should be run by private corporations that people are actually doing the due diligence on, because now there is no due diligence, because everyone knows that if grandma loses her $20,000 because the bank goes under, that grandma's going to get her $20,000 back. Except the only way she's going to get her money back and everybody else is they're going to print money to then make up for all that money, which is then going to further devalue the money we already have, which then means we're going to print even more money. And it's going to be a debt cycle that we're only now just at the very precipice of it. And we're already at a hockey stick going up already. John and I do have a $20 bet. Maybe Chris wants to get on of what the Fed's balance sheet will be by the end of the month. And so John's at 8. Let's see, it's at 8 trillion. I'm at 7.35 trillion is my guess. So don't be 7.351 trillion. Right, me. So.
Well, I mean, and by the way, again, for those that are just tuning in, we're talking about the fall of the banking sector, because imagine that. I mean, you look at the world right now and everything seems to be in a free fall speed collapse, and like Building 7. Make sure to hit that like button if you haven't already. And also you can check the links below to become a client of Tim Picciott at thelibertyadvisor.com. Very unorthodox situation there, especially with someone that actually gives you your private keys if you're using or if you're investing in crypto and that kind of stuff. We'll get into that more in a moment.
I don't give it to them. I never have it to begin with, so
yeah,
for me to potentially even take.
Exactly. So this is a very unorthodox opportunity, I think, for a lot of people. So make sure to check those links below for that, and also join our new newsletter at www.iambanned.com. I'm going to go into this next article out of CNN that I've mentioned before because I think it ties in with all this bail-in stuff, is that, as it says, do not take a bunch of cash out of the bank because of coronavirus. This article was written by Paul R. LaMonica for CNN on March 18th, almost coming up on a month. The reason I bring this up again is because I'm not throwing out this headline. I've highlighted it. I'm going to keep this headline because I know exactly what the government media, Operation Mockingbird media, is trying to do here. They're trying to scare people out of touching their cash because of coronavirus. And the idea is that this has been a plan in the works for a long time. As I say in almost every show now, Henry Kissinger met with Mao Zedong in the 1970s, creating an alliance and a monopoly on trade with China, leading into the creation of the Trilateral Commission by Zbigniew Brzezinski and creating a huge leg up for China, which then became a technocratic superstate, as Zbigniew Brzezinski wrote about in the 1970s, wanting. And he basically created this behemoth, this beast that allowed China to become a massive technocratic society with social credit scores and facial recognition and cashless systems. I mean, the US is already 97% cashless. Canada is largely cashless as well. But with that said, this is the perfect catalyst to pull people completely out of cash. You can do bail-ins, but you can't do bank runs. What are you going to do? Yeah, jumping to that next article there out of Forbes. I mean, this is Forbes magazine. This isn't, conspiracy media here. It's Forbes. Should our societies go cashless? Jumping into the next article there, cashless after COVID-19 from Euromoney. And obviously another example of someone pushing this agenda forward. Coming out of the articles here, I think that this is the ultimate game plan for Deutsche Bank, for all these major banking institutions to try to save face as we go into negative interest rates across the world. Chris, what do you think of the cashless society, centrally planned that is?
Well, I mean, going back to the bank run topic, it's hard to have a bank run when all the bank lobbies are closed. I mean, that has to be half the reason they just force a drive-through. I mean,
it's hard to have a bank run when all Americans are so fat and can't even run. No,
I mean, there is that, but they want this. I mean, this has been one of the things that people. I mean, I in the crypto space a lot. This is one of the things we've been talking about for a while. Is that Bitcoin, excellent, privacy crypto, even better, but if